Hello, guys. This is Social Trades once more. So this is the 1 year uh, chart that you're looking at here. So we're looking at the 1 year chart. So basically every candlestick you see here is a month. So it's a US government bond 2 year. So we're looking at the 2 years here. So we see that market did its job going lower down there, eventually went lower, taking out this, then went higher like that, right? So if the market wants to continue and go higher, where will it go first? Well, a reasonable area would be, let me pull out this so you can see properly. A reasonable anticipation would be expecting this level there, half of this fair value gap. That's a reasonable anticipation right there, right? Once we get this, it's reasonable for us to anticipate market going higher, right? And I'm talking on a year basis, right? Market doing this on this time frame. So, but first we need this. So now this will be out of focus. This is what you want to see. You don't want to see that. For now, we want to see this. So let's go on the weekly, zooming in on the weekly basis. Let's go on the weekly. This is the rejection block here. This candlestick here, this wick. So this is the rejection block. We came in here once more into the rejection block. There's no need for that to be taken. So let's see. And this level there is this wick from there to there. 50% of it is there. Right? Let's do that. Fix it. Let's do that. Yeah, you see that? There to there. There we go. It's that blue one, you see? That blue. So that's basically we'd like to see price remain below that. Let's write that down. That price, that bodies, basically bodies. Come on, what you doing? That bodies should remain below, right? Below this level. And then we're gonna keep that, and then we're gonna keep this here. And then we're gonna watch now this week. I've measured already this one there. So I'm just gonna make that blue too, because I'm understanding that the first one is this one. There. Also the bodies, this should now move there, basically. Yes. The bodies should remain under there. Mm. So let's go. Let's go. So we want to see the market next week just go down. Basically, go down. We want to see it below this low. Below this low. So it should go down, probably into this. This would be nice if it comes just into this. But on a much higher, we're looking for this. We are looking for this level there. On a on a bigger thing, we're looking for this. The 2.2 level there, 2.2%, we're looking for that. Okay, now on the daily, let's go on that daily. So on a daily basis, this one is the weekly one. The first one, we'd like to see also price remain below that. And also if we measure this week here on a daily basis, gonna do that. Gonna do that. We're gonna measure that on a daily basis. And I'm gonna make it green Because as long as price remains below that, the bodies, then we're good. We're good. We're good on a daily basis, right? On a daily basis. So there we go. On a daily basis, I'm looking at this green one. We like to see no bodies up there. Okay, let's write that. This one, these are two weekly ones. On a weekly basis, we don't want to see bodies above them, right? Yes, this one is on the daily, the one that we're actually looking at. No bodies above. We want to see bodies above, right? No bodies above this. Then you see that this was used, this volume imbalance there was used there. So for next week, we'd like to see it go lower, take out this low and this low as relatively equal lows. Right. Let me just gonna do that there. Meaning for this low and this low there, these are relative equal lows. It's nice sell side liquidity. I'm gonna write relative equal lows. I'm gonna just write it out. Relative equal lows, right? That's sell side. That's sell side liquidity, right? So we're just gonna look for market to come there, take that. Should be fast, really fast. Come in, take that. And there's also nice volume imbalance there, but it should take out this low and this low. And quickly also this one is there. Might as well just spring out there and take out this one too. And eventually we're gonna look for it to take out this low too. Use this to spring and eventually reach there. The 2.2 level that we're looking for there. That level, that's the one we're really looking for. So still bearish here or for the government yield. Yes, government bonds for the second one. Second year bond yield, we still, yeah, like that, bearish. I'm gonna go on and see the other ones. Hmm, that's nice. Hmm, let's go in the week and see. Okay, that's nice. So this one is like being used as an inversion, bearish inversion, FVG. This one, it's a bearish inversion, FVG there. So you see, we just simply wicked in it. That's beautiful. Just like that. That's beautiful. That's beautiful. Now we're gonna look for this to go lower. What can we look at here? We can zoom in, mark this wick. Mm -mm. Mark this wick nicely like that. Okay. And then basically, as long as price is below this, we go here. We can also look at this one. Because while we're there, this was a discount wick. So we're gonna mark it out too. So we're gonna do that, that, there. There we go. There we go. There we go. It's all coming together. Then now we're gonna do that, that, and I'm gonna make it blue to show that it's from a weekly time frame. And I'm also gonna make that blue to show that it's from a weekly time frame. Boom, boom, boom. And going up like this, we took out buy side there and there, right? And this wick held, 50% of it held, but we did it into its rejection block here from this level there by doing this, right? So that's nice. So let's go on that daily. But here, we're just looking for what? This to still hold price and then for us to drift lower, right? No bodies here above, just drifting lower, right? So let's go on the daily. So this is the daily. So these are two weekly levels, and this is the daily time frame. Hmm. This is very nice. So on this one, just looking at it like this week here, it's a very critical one. Let's see, let's mark it out. Put that there, make that green to show that is the daily thing. So let's go. So basically, I'm looking at this candlestick here. Okay. So now we have closed below 50% of this week. What is that saying? Weakness, right? So we'd like to see now nobody's above here. It can wick, but there should not be nobody's above here. Then it should start going lower just like that. Because of this low and this low, they're just too sweet for me. So I'm gonna call them relative equal lows. So this is sell side liquidity in form of relative equal lows right there. Sell side liquidity in form of relative equal lows. This low and that low. So we're gonna look for the market to quickly take these guys out. More down there. There's more there. Also, this is like sell side liquidity. So that's that. And then we have this week there that seem to be help price going up. So once we get to this week, it should invert, and then we should see it pushing price lower, taking out these guys out there. So this is what we see for this one, still bearish. Okay. Right. Okay. That's relative call lows or sell side resting here, even there, clear as day. Yeah, and then no more remove you. Okay. On this one, price already did its thing up there. So I'm gonna judge that this should now this was used. As you can see, the wicks did the damage outside, buy side there, but the bodies are telling the story remaining below there, right below this inversion fair value gap. So what is that? We're gonna make it orange to show that it's an inversion. FVG. So because of this behavior here, we're gonna demand that now just shoots take out these lows there. Uh, this is minor sell side, even this one. So we'd like to see all of this out real quickly. So next week, we're not looking for a market that's gonna play. We're just looking for a market that's gonna run quickly. So let's go. This should be sending this like this. This is sell side liquidity in form of this low and this low. This it's not a nice relative equal lows there. Mm. Okay. And you want to see this order block fail, and then its mean threshold being used to go lower, right? More lower. Eventually, you like to see this and this out. But now we are still here. This is holding price perfectly. You like to see it send price lower because, as you can see, clearly the body close there went way up above this candlestick. So now we are gonna demand that this thing just runs down. And this week there, let me see, Mr. Daily. So this week there, I wouldn't say anticipate 50% of this. I don't want to even see it return here, basically. I don't want to see it return there. Once more above here, I don't want to see it. So this is enough for me to say it should, at least if it wants to come back, should bump this right there and shoot lower. Okay, this looks bearish. Hmm. Anyway, I wouldn't buy it there. Hmm. So let's go on the weekly. This is all of these are the government bonds yields, right? The government bonds. This is these, and this is like suspension block here. Hmm. Once you come back and close below here, this suspension block, then I'm calling it all down. Take this and this. Right. So currently, okay, this rejection block of this is what's happening there. So we are looking at what? Zoom in. Mm. Boom, boom, boom. So this, measure this one there. Make it blue to show that it's from the weekly. And this should hold price nicely, right? Should hold price nicely. Let's go on the daily. There we go. There. Should do that nicely. Nobody's above here. This is enough. Even if it comes back once more, should do the same thing. And then nice. If you zoom in there, this is a nice situation here. Volume imbalance. This. So all of this being used there. So we should mark that out, I guess. Let's do it. On the daily. On the daily. Making that. Including there. So this what we have. Nobody's in there. That's beautiful. Okay. This is a weekly level. So now we're gonna demand what? Here, we're gonna demand that this thing goes lower, takes out this lows, then this low, and eventually this fails, and then takes out this low too. That's what we're looking for to draw into this suspension block here, right? It should do that. So in this one, I'm saying it's a suspension block because you can see there's a volume imbalance there and there's a volume imbalance up there, right? So currently this level here, the high of the suspension block was being hit, being used basically here in this very level there. So now we'd like to see it come, drift lower, and come to its lower level. So this is sell side once more. So it's bearish on all the US government bonds. We just bearish, right? So this is sell side liquidity. So just seeing sell side. Oh my God, this is beautiful, guys. This is beautiful. You don't see this every day. You don't. The Venom, you don't see Venom every day. Venom, Venom. You don't see that guy every day. Let me show you Venom, guys. Thank you, ICT, for showing us uh, what the others didn't want to show us. Because, man, I was studying everything. I won't lie. I was studying everything. My friends know. If you know me, you know I was studying everything. So this, okay, this is an inversion favor look at like this, right? But I want to show you the Venom. Venom part is this part. Yes, this is Venom. 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 The Venom cell, this one. You see, it works inside there. That's what you want to see. Nothing else. You just want to see that. So this is a verified Venom cell on a daily basis. So we're gonna just look. You can measure this wick there. Imagine it being this, right? Above right there. So we'd like to see what here on this one. Price go lower, take out this low and this low as in the form of relative equal lows. Then override this bullish order block and turns it into a bearish one. The sell side. So we're gonna look for that the market to just keep going lower. Okay. See something there. Okay. Gonna make this green. Longest price remains below this, we should be good. The longest one, right? We're measuring the longest one in this. So I'm seeing that as long as we are below this, we should be good. And then this thing should just keep running lower. So by all of this happening here, we basically just said more upside to the Nasdaq, more upside on the USDT, more upside on all of those, right? We mean more. Oh my God, did I do that? No, man, I gotta do something. Look at this. I wanna type something there. We mean more upside on NAS 100, US 30, and the S&P 500. All of these should see more upside, right? You should see more upside on these. More upside on these. That means you should focus on the buys, on the longs, and let this play out. All right? That's social trades. And know what that is? It's value at no cost. Bam.